part 2 of premium bar by bar trading techniques. We'll go probably for an hour and a half tonight. As always, in the US, our disclaimer that this is for educational purposes only. You should contact your financial advisor before making any trades. We're not encouraging you to make any kind of trades whatsoever. And this is all my intellectual property, so please respect that as well. And then, of course, the charts used here in this presentation were created with TradeStation charting platform. I've been using TradeStation since 1999 and still find it to be a good platform. All right, last session, let's talk a little bit about everybody can hear me, right, and see the screen. Let me just get a yes to make sure that we're doing this properly. Okay, good. So last session, we focused on market structure, and we did that first. Don't forget that. This really is the key to reading price action and to trading. This is where you're going to find the higher odds trades. There are other trades in the middle of, the market outside of structure, but really the best trades are always set up in terms of structure. And we can use both the higher time frame structure and then the trading time frame structure or the local time frame structure, as we can use both of those. And we'll talk about that tonight a little bit more. Not only does it provide location for trades, but once the market starts moving, it provides us direction as well, the market structure. So that's really important. If we're in an uptrend and you get a pullback on light volume, narrow spreads, all of that, the direction is still going to be to the upside. And we talked a little bit about how to find trades. I showed you David's chart, which is in his book, and also he gave me that years and years ago, and it's still very valid, as all of this stuff is. So that's market structure, and we want to integrate market structure with our trading time frame, whether it's the 5-minute chart or the daily chart or the hourly chart. Whatever, we want to focus in on reading price and volume. And we went through the basics of that last week with the high, low, and close of the bar. And we don't use Japanese candlesticks or Renko charts or volume charts or anything else. We use the standard old high, low, and close with standard volume, the very basic kind of charts. And we keep it simple, and we do that on purpose. And I'll talk a little bit more about that in a little bit here when we start talking about making a Wyckoff story. But we also talked about, and then we talked about the principles, if you will, or the indications, the Wyckoff principles, the good flow or the ease of movement, no demand, no supply, tests, shortening of the thrust, effort versus result, clustering of closes, poor flow versus good flow, springs, up thrusts, hidden up thrusts, key reversals, stopping volume, and climactic action. And those are the major Wyckoff principles that we see in the markets. There are a few others. There are things like absorption and capping the market or end of a rising market, bag holding, those kinds of things. They're not that they're unimportant, but they don't come up quite as much, and they weren't really. We'll talk, I think, tonight a little bit more about bag holding and end of a rising market, but in general, those are a little bit less critical. For shorter time frames like 5 minutes, how often do you expect to find a good trade? As often as they come up, Peter. You'll see several examples tonight of day trading on the 5-minute time frame and the number of trades that come up, and so you'll be able to get a good estimate of that. Think about it this way, though. In the best day trading market in the world, which is the S&Ps because of its liquidity, and because everybody knows it and everybody likes to trade it, you will find that there are generally 2 and sometimes 3 decent legs or swings during the day. And that's really what you're trying to capture, are those. So in that instance, you might have 2, 3, 4 trades during the course of a day. Some people are really good scalpers and they're in and then they're out 2 minutes later, and then they're back in again 5 minutes after that, out after 5 minutes, in the next minute, out a minute, in 2 minutes, and you can rack up, scores of trades doing that. But that's not what I'm trying to show you here. I'm trying to show you the higher odds trades and where they set up and what they look like when they do set up. Okay. Our notes sent for this session, yes, and we had trouble with the email today, so they're either in the members area or they're on the this little window here that you use for opening up the desktop, my desktop, and seeing the video and all of that. There's a thing there called handouts, and there should be a handout right in there that says Premium Bar by Bar Trading Techniques, and you should be able to download it right from there. Yeah, sorry, we had problems with email today. Couldn't get that stuff out. When you analyze no demand, no test, and supply, do you always have the standard volume visible? Yeah, I generally do. Or can you also read it off the Weiss wave? You can read it off of either, and we'll see. We're going to spend some time on the Weiss wave tonight. You can read it off of either, but I like both volumes on my chart. So when I do trading, so you'll see that as well. So what are we going to do? So what's normally on your chart layout, or do you use an EMA or an SMA? What's normally on my chart layout is exactly what you see. I have a 5-minute chart with standard volume and Weiss wave volume, and a 60-minute chart with standard volume, and a daily chart with standard volume. And I look sometimes at the 240-minute chart with standard volume. That's it. I don't have a lot of bells and whistles. I don't have eye candy. It was one of the things that I learned, fortunately, after several years of being a scratch trader, not making money, not losing a lot, but not making a lot either. And it's when I started to really look at price action and volume and understand that better, that I was able to start to wean myself from all the chart jewelry, the moving averages and the oscillators and all of that stuff. Not to say that they're bad things. I don't have anything against them. I just find this to be a much easier way to trade. We'll talk a little bit about that a little bit more. How come you don't use Weiss wave for longer term charts? Because mainly I'm a day trader. I don't really trade swing or longer term charts. My expertise and my love of trading is on the intraday, and that's where I'm best. So David uses them on the higher time frames. I tend not to do that because I'm not really focused on them too much. Where do we get Weiss wave on? You can either get it off of David's website, or you can get it from us here on our website. Either one gives you the actual Weiss wave. Okay, so let's keep going here. So tonight, what are we going to cover? So this is all about applications tonight. We did the heavy work last time of getting through all the principles that I wanted to get through. Now we're going to talk about how we put it all together. And the way we do that is we create what's called a Wyckoff story, and I'll explain that. And it's through the creation of a Wyckoff story that we will have a much better sense of what we're doing on our entries and our exits. And I'm going to talk a little bit about psychology, not real long, but a little bit about psychology, why this is such an important this idea of a Wyckoff story, why it's so important to traders, okay? And it's got something to do with our decision making. And I'll explain that. We're going to look at we're going to take a look at seeing a turn in the market, pauses versus turns in the market, and the key characteristics that portend a change, or announce or let us anticipate a change in trend. I don't know that anybody really talks a lot about this stuff, but we're going to talk about it tonight, including some very useful indications there. Then we're going to spend a lot of time on, or most of the time, on multiple time frames tonight. We're going to look at up trends and down trends, the ends of trends. We're going to look at how to use multiple time frames in trading congestion. We'll look at multiple time frames on targets, and then something I really enjoy doing a lot, trading a lot, is the higher time frame and lower time frame combinations. And I'll show you what that's basically a trade setup that works quite well. I'll show it to you. We'll talk tonight, and I think I've got this out of order. We're going to look at the Weiss wave and thinking in terms of waves and wave structure. We'll do that a little bit earlier than where it shows up here, but we're going to cover that tonight too. And we'll look at the Weiss wave in terms of effort versus result, and no demand and no supply, and also good flow, good demand over supply, demand overcoming supply. That's what D over S means. And supply or selling over demand or buying. Demand is buying, selling is supply. And that's what we're always assessing in the market. Then we'll look at just quickly how to create a daily or a weekly plan, and then I'll take some then some questions came in. We'll do those and any other questions you have. But if you got questions, ask them as we're going along. It's easier to deal with them as we move forward. When you look at volume, do you correct for daily patterns you get in volumes? I was looking at crude oil volumes, and they seem to exhibit a pattern throughout the day. Yeah, it's one of the reasons why we use the Weiss wave. I'll explain that in a little bit when we get to it. Yeah, in the UK, the volume ramps up in the morning, slows down in the lunch hour, and then ramps up again towards the US Open, which is towards the end of the UK. Yeah, so I'll show you how to deal with that. Yeah, okay. All right, so let's get into this here. And how am I not? Let's talk about telling a Wyckoff story. Okay, just like last time, I'm always going to have a chart, blank, unannotated chart, so that you can go back and assess it later on. So this is a 5-minute chart. Well, let's just talk about making a Wyckoff story. So we start with the chart, and we can identify some of the key bars and volumes, and that's good. We can also add a little bit of local structure here, and we begin to see that the market up in this area is oversold, right? And if we add the higher time frame structure, which would have been which in this case happened to be the overnight high. I think this was the other day here, the overnight high, okay? And now, everybody with me so far with this on looking at this here, right? We add in structure here, and then we start looking, good. Then we start looking at the individual price and actions. Okay, so let's take a look here, how this works out. And I'll go through this. From the bottom down here, up to bar 1, what do we see? We see good flow to the upside, right? We see wide spreads, closing firm up in here, pretty good spread, closing firm. We see volume expanding to the upside as we get that good ease of movement up, right? We talked about this a lot last time. Good flow, good ease of movement. So when we see that, then and we're pushing forward, and we've broken resistance here, right? This is old resistance. So we've broken that on the way up. So this is a strong market. We see the strength in here. And you can see, as I've got some notes here, we break resistance, it makes a higher high. So now we have a low down here, and we have a high here, and we have a higher high, right? This is our definition of a trend. Doesn't have to be sophisticated. We don't need any fancy indicators or anything for this. All we need to know is, are we breaking resistance? Is there good flow, good ease of movement, volume expanding with the widening price bars, closing firm? You know, there's going to always be some side stuff in here, but what we're interested in is the directional movement here. So this is a strong little push to the upside. Now we get a pullback on light volume, right? And we see that this is light volume, light volume, light volume, all the way down here, all light volume, right? The downflow, what does that look like? Are we making, you know, we started on bar number one, it tried to go up, and then it closed down here on the lows here. So we started to see some flow to the downside. But look at what happens. We're not doing anything. The downflow here is really poor, very poor. And then we have a little flush underneath the last couple of lows here on bar two. It's a small key reversal, a minor key reversal, right? But we're not going down for 15 minutes here, and then we push back up above the lows here and above the little support that's been created. Well, there's our entry right there, right at that point, okay? And our target is going to be the overnight high or higher. Use structure for the target, right? And the market goes up, and it gets into the top of the trend channel, the supply line, and it finds some supply there, right? Look at bar four. We have the largest amount of volume so far on this chart, right? And it's down. That's distinctly different than what we've seen before. Prior to this, the higher volume has been on up bars. Yeah, we had this small one. We had this, some little bit of volume come in here, but most of our volume has been going to the up bars, and this is much larger. Bar number four is much larger than bar number one, comes down quite a bit more, and the volume is substantially higher, right? So this is the beginnings of a behavior change in this market, and it's occurring at the top of local resistance in terms of the supply line and the overnight high, okay? Next, what happens is bar number five has light volume compared to the recent actions here on bar three and four. Bar three had that much volume and went that amount of space. Bar five is less volume, and it goes nowhere. So you could either, this is really no demand is what this is showing, and there's lack of activity. The width of the bar, from the high to the low, shows lots of activity here. There are a lot of trading activity. Buyers were first willing to follow price up, chase it to the top, and then sellers are willing to chase it down. Here we get no demand. There's really not a lot of buying activity. Some, but look at where it dies. It dies right at the overnight high. So here's our Wyckoff story. We have a market that had been going up from about 8 o'clock to almost 9:30, almost an hour and 15 minutes. That's pretty good. You know, you'll see if you work, especially like the S&Ps, an hour, hour and a half, 2 hours. That's generally about it for the swings, right? So you have a nice swing going up here. We were able to capture a portion of it. And now we have a swing coming down that we're trying to capture, right? So we know that in general, anywhere between an hour and 2 hours is pretty good for a swing. So that's something to tuck in the back of the mind, right, from experience. But we're seeing higher prices get rejected at supply line after a good move up after an hour and 15 minutes. And it's also occurring at the overnight high where the markets failed to go higher. So we're getting supply coming in, excuse me, supply coming in, followed by no demand at resistance, okay? And so there's a story for us to take a short. That's a much better idea than other places on the chart for a short. But that's a nice Wyckoff story. And we see on bar 6 that as soon as we start heading down, volume increases. This is a key indication for us on our short trade because we know our short trade is in good shape, right? Now we're getting volume coming into the downside. Look how this has changed. Look how the behavior has changed. Volume coming into the upside, good solid closes coming in here, right? Now we get good solid closes to the downside, firm closes, and volume is coming into the downside. We get another opportunity. Now we've got an even bigger Wyckoff story. We have all of the stuff that we talked about earlier coming into the overnight high, the supply line, the no demand, the supply coming in. And now we can add to that with follow through to the downside, if you will, on the next price bar with good volume coming in. So we've seen now a change in behavior as this comes back up to retest resistance, turns into support, turns into resistance. See that? We're coming right up into what we call the pocket here. This is where we get a couple of bars in here that hold, and then the market starts down. And we will frequently see price come back up into the pocket. And this pocket is stronger because we have resistance that turned into support, which would now be resistance again. So we have, if you remember the access line that we talked about last time, this is a minor access line where the market has rotated around and they can become pretty important. So back up in here is a second, you can either add on to it, or if you miss the first trade, there's your opportunity. And we would exit in the shortening of the thrust down in here somewhere as we come back into the vertical acceleration area of the early part of the morning, right? All this, by the way, before the US session is even opened, or we're coming down through the US session being open. So that's a Wyckoff story. Much better than, I'll go off on let me just answer questions, then I'll do a little, where do you enter on bar 7? Yeah, right on the resistance here. I put an offer, a limit offer. You'd be able to see that all of these are within a half a point of one another for sure, right? So let's assume, let's see, this is 5. Let's assume that this is 512.5. That's the line here. So put your offer to short. Put your offer out at 35.12, a half a tick below this, a half a point below this, right? And you're sure to get filled. If you put it right at the number 12.5 here, you probably won't get filled. It may come up and touch it, and there'll be a couple of trades at that point, but unlikely that you're going to get filled. Stop goes back up above the high up in here. If it's too big of a risk, reduce size, reduce position size. All right. Okay. So at what point do you draw the trend lines? Well, you can't draw the trend channel until bar 3 has completed or has come up through bar 1, the top of bar 1. Now we know that this is a solid point, and we can put it on here, and we put that on, and then that is useful for us up in here. Does nothing for us down in here. It's only useful up in here, okay? When do you enter that limit order? After bar 6 is formed, yeah. Yeah, don't do it beforehand, otherwise you're gonna be in, you're kind of trading blind. After bar 6, you wanna say, okay, I wanna get in right up in here, and you'll have plenty of time to get up there. It doesn't happen really quick. Now, most traders, let me explain why this idea of a Wyckoff story is so good. Most traders would look and say, oh, there's a bull flag, let's go long, right? Or they might see a bullish engulfing pattern, right? If this was a down, I don't even remember how you do these things, but that would be bullish engulfing, right? Something like that. Or 3 dancing crows or whatever pattern you have, okay? So most traders see like a bull flag or a head and shoulder formation or something like that. And they say, oh, great, bullish flag, bullish engulfing pattern. And they're thinking, eureka, I've got a trade here. Let's go long or short or whatever it is. All right. This seems like discretionary trading, right? You see a bull flag and you go long, but it's not. In fact, that's more like systems trading. You know, you're kind of telling your computer, meaning yourself, to buy all the bull flags. But this is a trap. This is a really huge trap for using this method. We don't use this method in this way at all. It's kind of like buying a used car, if you will. I'm going to take it outside of trading for a minute to talk about the psychological implications here. Now, if you're like me, you know very little about car mechanics. In fact, I know pretty much nothing. But we've all bought used cars before, right? So how would I approach buying a used car? Well, I'd go to whoever's selling the car, and I'd see the car there, and I'd walk around the completely nice and slow, right? And slowly walk around the exterior of the car. And I see it's been washed and waxed and it's nice and clean and shiny. And I say, that looks pretty good, right? No dents or dings that I can see. So then I go and I look under the hood. And I see under the hood, the engine looks like an engine. That looks pretty good. So now what do I do next? Now I do the sine qua non of my used car purchasing decision making, and I go kick the tires, right? And as long as the tires don't fall off and the car is polished and shiny and the engine looks like it's there where it's supposed to be, I think to myself, this must be a good car, right? Think about it. That's what most people do when they go to buy a car. The right thing to do for those of us who are mechanically disinclined and have severe mechanical deficits, it's a really good idea to take the car to a mechanic and have them assess it and analyze it and determine what's good and what's not good about the car. That's the only way you would know. But yet we make decisions like that. And it's the same thing. I see a bull flag or a bearish engulfing pattern and I say, eureka, I got a trade. That's like just walking around the exterior of the car and kicking the tires. Yeah, you got a bull flag, but what are you doing? You're matching a pattern with something that you've read in a textbook somewhere, right? You're matching a chart, what you see on the chart, with a textbook. Not to say that bull patterns don't work out, but that's not good enough, really. Most of the time you're going to be you're going to be at best a break-even trader on this, and then you're going to start kind of overriding yourself. Well, it's a bull flag, but it doesn't really look like a good bull flag. I better not take it. And of course the market then takes off and makes the highest high of the last 3 weeks. We don't want to simply match a pattern from some book, a head and shoulders pattern, bullish engulfing pattern. I see all the Twitter traders coming up with the head and shoulders. There was one a couple of weeks ago. They all thought for sure it was going to rally to new highs. It did rally to new highs, but it went down to new recent lows first. So the Wyckoff story is going to save a lot of traders from a lot of problems and hardship, because building a Wyckoff story requires you to analyze what's happening with the price action against selling and buying in key areas, not matching a pattern, but identifying the selling and the buying in here from the yes, there are patterns here, but they're much smaller, and we're not just looking at one thing and calling it a day. Okay. Yeah, I'll explain a key reversal again. Yep, I will. A key reversal looks like this. I'll look for other ones. There's a couple of key reversals here. And that one is 1, 2, and this one is 1 as well. So key reversal goes underneath the recent lows. Could be a bar, could be a couple of bars, could be a bunch of bars, but it goes underneath the lows, comes back up, closes firm. I like it when they close right on the highs, but this is good enough. That's the idea is lower prices, lower prices, lower prices, lower prices for that moment get rejected, and we rally up and close firms. This also happens to be a spring, and so does this, but these are key reversal bars. Okay, so it's the story that we're interested in because it's the Wyckoff story that helps us analyze the market. It encourages us to, instead of just taking a bullish pattern, we start looking at what's going on in the market. Okay, so the components would be price and volume. And here we're looking at the lower time frame, and we're looking at what principles are showing up. No demand, testing, no supply, effort versus result, shortening of the thrust, clustering of closes, all the stuff we talked about last time. What's the structure, both local and higher time frame? We'll talk a little bit about local structure in this too, because it also is useful. And just like the higher time frame structure, we want to know, how is price and volume responding to that? What's it doing with respect to the structure, right? Remember, Wyckoff talked about the study of responses. That's what we're doing here. We're studying the response of price and volume against structure. So is it breaking the old resistance on good ease of movement and good flow and trending higher, giving us higher highs and higher lows? Or is it holding a key level of support or resistance with testing and no supply and key reversal bars and all that stuff? And also the higher time frame, we look at, is price at the higher time frame resistance or support? And is there evidence of buying or selling, which is accumulation or distribution, in the background of the higher time frame? This is pretty important. We didn't touch on this last week, but when we're looking at the higher time frame, it's more than just structure. We also want to know, what's the background going on? What are the background conditions? Is there supply coming in? Is it good ease of movement, good demand, breaking the resistance? And so that background is bullish. Okay. All right. Take a look at another one, another Wyckoff story. Hang on a second. Somewhere here, I've got, yeah, my notes. Okay. So, we have to wait for these to happen. It takes some patience. You got to be able to sit on your hands until the right moment, until you see something useful. The Wyckoff story will help you do that as well. So we can see that the market's been in an uptrend. It goes into a lengthy consolidation, and then this isn't quite a spring. This is more of a shakeout, a terminal shakeout, but you can think of it like a spring. Terminal shakeout just comes down for a couple of bars and then rockets right back up, usually at the end of the trading range. And the way to tell the difference between a shakeout, terminal shakeout, and a spring is the length. The spring doesn't come down this far. It would maybe come down to this bar. We might see this bar, and then the next bar should be up like that and closing back up. Here, we're coming underneath quite a bit more. And you can, on a stock, it would be 1 or 2 points, maybe would be a good spring. And here we're coming down from 91 to 88, so that's 3 points. That's quite a bit. So that's more of a shakeout. And they're really goosing the thing down. You can't buy this. I can't see how you would buy this. But on the way up, look at what happens. On the way up, volume is sustained here as we're rallying and we come back up above what was old support, now turning into resistance. We break that resistance and come back up again, okay? And we rally up, we have a little pause here, nothing to do with that. We rally up, we break resistance again. Again, we're getting demand overcoming supply. Look at how this is coming. We get a good goose up, and then look at how this is coming up so nicely there. So now we're in a position, now we've got good demand coming in, and I don't know if yeah, we're just right here, but that's okay. You've got strength coming through. We rejected lower prices, right? This is a rejection here. A rejection of lower prices and a rally up on good flow, good ease of movement. Now, as we're coming back, what do we see? We see the volume drop off. This bar closes mid-range, so there's buying coming in, and then we have a really narrow range bar on again, light volume. This is a good spot to buy with our stop right underneath here, right underneath this level, right underneath here. That's an excellent spot to buy, and the market pushes on up. And again, so the story here is lower price. We're in an overall uptrend. Consolidation has taken place, lower prices get rejected, and then we rally up strong, and we have good, solid flow to the upside, good ease of movement to the upside. We have a brief pullback over a few days. This is the JP Morgan on a daily basis. We have a couple of day pullback on light receding volume. That's so important that the volume recedes. And then we rally up. So now what happens is we break the larger resistance here quite nicely, right? And on the rally up for that, we see good ease of movement. We see volume coming into the upside. There's strength there. And then we do a little bit of a larger pattern that ends in a spring down here, a picture perfect spring. And we're on top of support. This is one of my favorite trade setups of all time. We break out to highs here. We come back, we retest. This in Wyckoff terms, this would be called a jump across the creek, right? And then a backup to the edge of the creek. This was a story about a Boy Scout who was, his campsite was over here, and he's on this side of the river, and he tries to go over, but the river's too deep here. So he goes back and he tries to come in. River's deep here too. All along, the river's really deep until he gets to the point where he can jump across it. So he comes up here, he gets a big running, pulls back, gets a big running start, and then jumps across the creek and propels himself quite a bit, and then comes back, and this is a small back up to the edge of the creek, and this is a larger one, comes up back to the creek, takes off his boots, cools his feet in the nice cool water, and then continues on to his campsite. That was just a story that was told by some of the early Wyckoff people to help traders remember this. So this combines a spring with a jump across the creek and back up to the edge of the creek. But you don't need to know all of that. All you need to know is we push up and we get good solid volume coming into the upside, good spreads, good responses. Then we have a choppy pullback. Look at the pullback. Look at the character of the price bars compared to this, right? It's going nowhere here. This is good flow. This is poor down flow. And so we just are patient and we wait for the right time. And there it is. The spring occurs and that's our buy point. That's our Wyckoff story. Okay. For a spring, close just has to be above the support line. The spring looks a little weak in terms of where it closed. Here, no, it's fine. It's just got to be above the key thing on a spring is that the lower prices got rejected. And that's what happened here. Yes, if it closed like this, it would be great, right? That would be preferred. We don't always get that. And so you've got to make a decision. Is this one bar going to negate all that's going on here? Probably not. There's no supply coming in here, right? If anything, supply is getting rejected. So sometimes you don't have a crystal clear everything lined up, and you don't have to take the trade if that's the case. But if you've got a Wyckoff story, you know what the supply-demand equation is here, and that can give you a good. Can you point out points to go long? Yes, the green arrows here. So here's the first spot to go long. Here's the second spot to go long. I think we can even, yeah. Here's the third spot to go long. We again break resistance, create a higher high. Price action isn't terrific. This is pretty good. This is not great, but we get that key reversal right here, right on top of support, and there's another opportunity to go long. So you have three opportunities, the best one being number 2 because of the way it sets up right on top of support. Okay, the other two are fine. They're good trades, but this is the one that is the best choice trade, the choicest of the choice, if you will. All right, so, and you take the long entry on the close of the bar. So this is a daily bar. If you're close to the market, you could, and you're trading and you had this on your radar, you could do that. But for people who are trading at the end of the day, this is your point of entry on the close or the next morning's open. Okay, I'm dedicating a good amount of time to practicing bar by bar replay for a few months, then simulation trading. I know it's different for everyone, but how long before, on average, before it's do you think it's possible to start trading real money after sim trading? Let me talk about that at the end. Remind me of that question. I want to keep going with the charts, and that's a little bit out of context there, but I'll address it at the end, okay? Okay, so let's keep going here. Maybe if I can get the slides to move. How come okay, there we go. All right, here's a recent play in Intel on the daily basis, right? Just from the daily, we can see that we're in a downtrend, right? We have a high and a low and a lower high and a lower low, right? We also have a lengthy sideways line in here. And we also see, if something's off on this thing here. Yeah, just adding a little bit more chart to this. We can also see that the resistance is holding support here, right? Not resistance. The resistance is holding up in here and here. And we see in here as well, right? And support's breaking. Support broke here, support broke here. Critically important stuff telling us this is a weak market, right? So price drops down through support on a big gap and then makes its way back up to old support, now resistance. It was serving as support in here, and even here, it's not right on top of it, but this is our support line, and now it drops through and we're coming back up. So now we want to assess the price and the volume action in here, right? So let's do that. So let's take a look and see what we see. Hang on. So at the top of the trend channel, right, we've got a trend channel here. We're in an overbought position. As the market pushes up above the local resistance, this is local resistance here, right? We see poor upflow on bar one, right? Clustering of closes, lack of demand in here. It's not pushing up after it broke out. Generally not a good thing. But we get that key reversal here, another example of a key reversal. And that says, and it's bouncing off of the old resistance, right? The resistance. So it says that another rally of some sort is likely. And then we get that, right? We try to go up first on bar three, not a lot of volume there, really kind of just lackluster demand. On bar four, we up thrust the highs here after coming into right up near the supply line on this daily chart, right? And we see that supply comes in. Now, look at the heavy volume coming in on bar four, right? This is our short right on the close. There's a good short right there. Now it's a little aggressive because we haven't broken the uptrend line. We haven't broken the demand line. That doesn't get broken until bar five. And we're still kind of up above support. But notice what happens on bar five. Volume picks up a little bit to the downside. It doesn't start receding like it typically does, right? We get a little rescission in volume on the next bar, but look at what happens on bar six. Bigger volume comes in, the same amount as on, or almost the same amount as on bar four, and we stay a narrow range. We can't even close above the high of the prior bar, right? And there's only one thing that can do that. This is kind of capping the market. There were a lot of buyers in this volume, right? But price activity was stunted. It remained within the narrow range, right? That's what we can tell from the range. The price didn't move that much. So on all that volume, there was a lot of buyers, but there was also sellers coming in and stepping on that buying. So every time somebody's buying one or two lots, there's 4 or 5, that are right there to take those, to short into that buying, to take those buys. And so that is effort versus result. So we have a downtrend in the background, overbought in the trend channel, supply coming in after a lack of demand, followed by more supply, and effort versus result. There's a Wyckoff story. That's your short right on the close here. You can, if you wanted to, you can put a sell stop under here, though you wouldn't get filled. You'd be slipped quite a bit. You wouldn't get filled until here. So, and then the market drops down. But let's look at it, start to think about higher time frames too. We can introduce that idea in here as well. Here's the daily chart right in here, right, that we've been looking at. But also here's the weekly chart of Intel. Now we have an even more complete picture. On the weekly chart, we see that the halfway point would be measured from here to here, would be approximately right in here, right? That's the halfway rally. Remember what Wyckoff said, markets have a right to go halfway back. More than that, and it's, there may be a change in trend. Less than that, the market is still, in this case, it was weak. The market would still be weak. Here it goes back to the, right back to the halfway point. Notice the high volume here on the widespread down. So this is a vertical acceleration area, and we're coming right in to test that as well. So this is what's occurring right here. And we also note that we have a supply line on the weekly, right? So what's the Wyckoff story here? We've got clustering of closes. We've got effort to go up on bars 3 and 6. We've got supply coming in on 4 and 5. The weekly, we're at the top of the uptrend channel on the daily. Weekly has significant supply in the background, not just here, but look at this over here too. A lot of supply in there, right? We're going to take a look at this chart on this section a little bit later. We get into the halfway point. We are at the weekly supply line, all kinds of resistance in here to take the trade. So even though it doesn't give us a clean entry per se, it's pretty darn good. It gives you should give you a lot of confidence for taking this kind of a trade. Now notice also that the weekly, here's our target down here. Well, first target would be here, and it breaks that. And then second target would be down here. And you can see the shortening of the thrust and the high volume coming in, indicating that that's likely to try to hold at this point, okay? This is taking a Wyckoff, this is telling yourself a Wyckoff story. Much different than, you know, even if you've got, let's say you've got a 20 period moving average here, right? And you've got some sort of an oscillator on here that is coming back into zero, and price is up in here and then comes back down into here. This is what most traders do. They say, okay, it's touching here, so I'm going to buy this. But you don't know, you know, if you're not looking at the price action, if you're not looking at what's going on in the background, you don't understand what the higher time frame says, and you don't get a sense of, do we have good flow or not good flow, or what's the story here? You know, it's kind of like playing craps. It's kind of like a crapshoot. You're really kind of trading randomly. You really have to. So even if you're using indicators and moving averages and all that, still use this stuff. This is very useful, even if you're using indicators. Again, I'm not against them. Where can you watch the recording? It'll be posted in the members area. Yeah, it'll be in a day or two. So when we're looking at the Wyckoff story, again, just the components here, kind of a review on the trading time frame. What's the current trend? Is it weak or strong? What's the flow like? Is there ease of movement or no real strong flow? Where's price in terms of location in the trend channel? Is it at a point where we can buy it, or is it at an oversold position or an overbought position? We look at the individual price and volume bars on the trading time frame. We do it also on the higher time frame, but this is all the stuff we talked about, from shortening of the thrust to effort versus result. We also want to look at recent background conditions on both the lower time frame and the higher time frame, assessing strength and weakness, demand and supply, broken support and resistance. We did that here, right? On this, we looked at the higher time frame weakness, and we're coming back into the weakness. We're also seeing the weakness on the smaller time frame. And as we talked about before, going back, this chart didn't have it had a lot of price action on it. We saw that it was in an overall downtrend as well. So we knew that there was weakness in the background, right, from that. And so we look at both the lower time frame and the higher time frame for this. And on the higher time frame, that's going to give us the overall market structure. It's going to tell us about what the flow looks like, certainly support and resistance on the horizontal, but also trend lines and supply and demand lines and access lines. We've got several different ways to look at trend lines and support and resistance. Halfway retracements are important. It's just a kind of small rule of thumb that we use. We don't do Fibonacci with 38 and 63 or whatever those numbers are. I don't even remember them any longer. Just keep it simple with that. vertical acceleration areas on both time frames really, but also especially on the higher time frame. And the higher time frame helps us set targets. It's such a useful tool for us. Okay. Can I show the up thrusts again? Yeah, we'll see more up thrusts. Where can I learn more about the Wyckoff story? I want to catch up faster than slower. Well, there's only two people who talk about it, and that one is me and the other is David Weiss. David actually came up with the idea of a Wyckoff story. I've sort of, some people might think, gilded the lily by adding all the structure and the higher time frames to it, but I think it adds to all of this. All right, let's take a look at a Wyckoff story from a day trading perspective. And I'll show you this again towards the end, but we start with a daily chart here always on when we're day trading. And we're looking at the key highs and lows. If you look at charts here, forget this for the moment, look at, we traded around this high and this low. We traded around this high. We go back above this high. We're inside here. We trade through this low. We trade through this low. We trade above this high and then back again. We trade through this low. So you can see how often we are at daily highs and lows. Sometimes it's a couple of days back. Sometimes maybe it's 3 days back, but it's the obvious stuff. We're looking at always yesterday's high and low. And here, since we're closing up above the 2-day high, the 2-day low and the 2-day high, which is also significant resistance, right? So we lay that out ahead of time. Now we come in the next day. Here it is on the daily chart. So these are small. This is kind of small. So this is the overnight high here. Overnight. Sorry, these are so small. And then this is yesterday's high. So yesterday's high. So notice we come in here, we see buying coming off of yesterday's high. We get this bottom, it's not quite a bottom reversal, but a good solid move to the upside on the 5-minute. We can feather in, we can buy the close on that, or we can try to feather in. Either way, we rally up, back up to the overnight high, right? Then we see we see selling coming in, heavy volume on bars 6 and 7. Bar 7 shouldn't have heavy volume, right? We talked about how when the markets start to pull back, the volume recedes. When the market pulls back, the volume recedes. Here, it's showing supply. Now so you can short against that kind of aggressively against the overnight high, but we come back down to yesterday's high. We see lower volume now here and a key reversal. We also see some shortening of the thrust in here. You can take an opportunity to buy here. It doesn't go all that far. Then we come down. Look at the ease of movement here. Right, we're coming back underneath yesterday's high here to go down and to make these lows down in here. So then we look for no demand, and there it is. And a weak rally and no demand, and there it is. And there's another opportunity to make a trade. So somebody was asking about how many day trades during a day. So you got 1, 2, 3, 4 here. And that's pretty much the day. I don't really see much in here to trade. And those would be the best trades of the day on this day. You don't need to have a whole lot of trades. Some people like that, but you don't really need to have a whole lot. So we've started to talk a little bit about multiple time frames, but the key consideration here is developing a Wyckoff story. And we talked about the components to it, and they're going to be different each time. Sometimes there's going to be no demand. Sometimes there's going to be supply. Sometimes there's going to be a hidden up thrust. Sometimes there's going to be a combination of those. Sometimes we'll get clustering of closes, shortening of the thrust. There's no specific pattern that we're looking for. It's assessing the supply and the demand through the price and the volume at key areas of structural support. That's what we're talking about here. Okay, so let's get into the Weiss. Any questions about this? Yeah, I don't know, Christopher. Christopher asks if David is okay. I haven't heard from him in about a week. I was going to send him an email tonight after this. I was looking this. I didn't see any of his typical nightly emails, so I'm not sure what's going on. I haven't talked to him for a while. Do you use the 5 and 60 minute with the Wyckoff, same with the Wyckoff story as you would with the daily and weekly, or do you leave out a few stuff? No, exactly the same. We're going to do that in a little bit. Don't worry. It is a 2-bar bottom reversal. Yes, Jeff, it is. Okay. All right. So let's talk a little bit about the Weiss wave. So one of the things about the Weiss wave, and there's a chart, you'll see it even better than this, but you can see that in the morning, here's 9:30 when the US session opens. Here's noontime. And then the afternoon, say from about 3 o'clock on 2:30 on. You can see that there's a bit of we call it the volume smile. The volume is large during the first hour or so of the morning. Then it drops off. It gets lowest in the noon hour, which runs basically from 12 to 1:30, 2 o'clock. This is the S&P as I'm talking about. And then goes up in the afternoon. So you get that smile, right? But that's hard to be able to read all the time. So the Weiss wave gives us some indications about what all that volume is doing. So let's take a look here at how to use this. So we see an upthrust on bar 1. Shilin was asking for more upthrust. Here you go. Here's an upthrust, right? This is coming off the first bar of the day, so volume is going to be high. But look at what the price action does on this. It closes underneath. It's rejecting higher prices here. Bar 2, still pretty good volume, but it's less than the previous bar, right? So there's less demand, there's less buying coming in. And again, we're closing underneath, and then the market falls. Look at how the market falls. We start to see volume pick up to the downside, just what we don't want to see if we want to be a buyer here, right? So we break support, we have volume come into the downside. So now we have an upthrust, broken support, volume, and evidence of supply. Now, can we find no demand in here on a weak rally up? And we will look for an opportunity to trade short. So now on the Weiss wave, we can see that there was pretty good volume coming in as the US session opens. Then we drop down for a couple of bars and we have pretty decent volume to the downside. So we can see supply is certainly active in the market. You can see that prior to the open that the supply and the demand was quite a bit less. So as we rally back up, we see on the standard volume, lack of volume at 4 and a nice hidden upthrust at 5, right? So this is a test. And when I say this, I mean all of this. All of these bars in here. This little rally up here is a test of the bigger upthrust going on, right? And that's a nice choice trade. And so we have no demand, or I'm sorry, a hidden upthrust in there. Also, notice how the Weiss wave up to bar 5 here, how much volume there is there. It's bigger than the prior 2 waves, right? And the Weiss wave, by the way, is measuring, it's just adding up the volume. It's accumulating the volume from this swing to this swing. right, from a close to close basis. And the Weiss wave here comes down to bar 3, and it started at bar, probably started at, yeah, bar 2. And then, so the Weiss wave, and I'll show you in a little bit that you can plot swings as well. But the Weiss wave is basically plotting the volume on each of these swings. So this is the volume with this swing. This is the volume on this swing. This goes to this, and so on, all the way through. Okay, we'll talk about waves in a little bit, or swings. As we come up, we see the hidden up thrust. We also see clustering of closes. We see this large amount of volume on the Weiss wave. Well, notice we have all this volume, and we had less volume on this wave up, and we went to this price level. We have more volume on this wave up, and we're not getting up. So this is effort to go up with no result. Same thing as that we saw in the price bars last week, but this is now on the Weiss wave. We can use the same things on the Weiss wave that we use on individual bars. And we're not going to get hidden up thrusts and clustering of closes and other things that are price bar relevant or specific, but we will get some indications, particularly with respect to the volume. So this is effort to go up, no result, meaning that a lot of buying going on, but sellers are more active in here and in control. The short is right on the close here. You can feather it in if you wanted to, but anywhere in there is fine on bar 5 or the bar after 5. And then we do what we expect and the market drops. Now notice how unclear, I mean, you get some good, nice flow to the downside, right? But a little unclear about the volume, but look at the Weiss wave volume. It's strong volume to the downside, right? Now, as we go along, notice that we find a low in here. Let me erase so you can see. We find a low, and then we rally up. So I want to point out a few things here. First is looking at the price action. Look at bar 6 and even the up bar before bar 6 here. But bar 6, good, strong, solid bars here, right? And starting with bar 6, we get good volume coming in. Now look at bar 7 and then the bar after bar 8. See how they get smaller, right? The ranges get smaller and the volume, instead of being high like it is on 6, gets smaller, and then the bar between gets smaller and smaller, right? So this is just another way to read the market. The flow is starting to get poor up in here. And we're coming into resistance. We also are about halfway between the swings here. And we get no demand on bar 8, and we get supply on bar 9. We get volume increasing to the downside as we turn down. That's a really good sign for us if we want to go short. There's where we short, right on the close, or as the bar is going down, either way. And on the Weiss wave, we don't really ever see volume come back up again. And again, we come up here into this area, a lot of Weiss wave volume. Again, this is kind of effort to go up, no real result there. And that Weiss wave would start on this bar and go to this bar. So this just shows a lot of volume and no real result. Keep going with this. The Weiss wave on wave 5 would confuse me. I'm not sure what wave, white wave 5. Yeah, it's just effort to go up and no results. The same thing as, we see effort to go up on bar, well, not really. Let me see if I see anything here. Yeah, the last bar here. And look at the volume here. It's clipped, in fact, but look at how big the volume is, and you've got shortening of the thrust, close in the middle, heavy, heavy volume. This is effort to go up and somebody is selling into it. Well, it's the same thing here. It's just on a wave basis, that's all. Okay. You're understanding now. Good, good. All right, let's take a look at another Weiss wave chart. We go screaming up here, right? Huge volume coming up. We get to bar one up in here and look at how they can look at the volume on bar one and the narrow range. This is effort to go up, no result. But because it's way up here, way far up in this move, right? And it's coming in with very high volume, we would say that this is capping the market here, or this is what Tom Williams would call an end of a rising market. But just as important as that, look at bars 2 and 3. Yeah, the volume's going down a little bit, but geez, there's the average volume in here. It's still sustained volume, still heavy volume, okay? Now, we see that a little bit on the Weiss wave, not a lot, not a lot. It's still showing us pretty much the strong demand there. Look at what happens when we go up to bar 4, which is an upthrust, right? On heavy volume. We poke up above and price gets rejected up there. Now we go sort of sideways in here and come back up on bar 5 and look at the light volume here. So no demand followed by a downturn bar. That's our short right there, okay? You might have taken a short here, and then as the market just went sideways, you'd have to scratch out of it. But notice a couple of things here. One thing in particular that's really important is look at the quality of this rally here. It took a while. It went from about 10:30 to about noontime, so an hour and a half, right? But look at the quality of that rally, compare it to this. There's no comparison. This is a weak, choppy, sloppy rally. You can tell, you can draw a line through and hit most of the price bar. This is trending up, but you can even still hit most of the price bars here. But just drawing a line through, you're going to hit, that's congestion, that's consolidation, right? Now, here's where the Weiss wave comes into play. We get a really good move up here, right? Now, look at what happens when we're at 5. There's just no demand in there, no demand whatsoever. Harder to read here because you don't know, is this still, looks like pretty good volume. It's sustained all this time. Maybe it's going to go higher. No, the Weiss wave tells us no, and it just shows you that diminishing volume coming down. Then the market breaks, right? We go down to 6, and look at the Weiss wave now comes in. Volume is now, downside volume is dominant, right? We rally up, and yeah, volume recedes here, but look at how clear it is on the Weiss wave. Picture perfect. And we see that small little narrow range bar on that light volume. That's no demand. You can short that or the next bar right at resistance, okay? Now, I said earlier that we want to also think in terms of swings, or what we refer to as waves. And the Weiss wave indicator has 2 components to it: the volume, which is what I use all the time, and also it has the swings or the waves. I don't tend to use them because I can read the waves in the price action and the volume. I don't feel like I need that, but you can certainly use this. This is very useful. Notice we have big wave going up, right? Small wave to the downside. Now, I just combine these here, even though the Weiss wave has them choppy. Smaller up wave and small and choppy. Now, suddenly, big down wave. Things have changed, right? This is change of behavior. Larger wave down on the largest downside volume since the up move began. Let me repeat that. It's really important. We see here, for the first time, the largest wave down on the largest downside volume since the start of the up move. Okay, and you can reverse that for down moves. You can say that since the start of the downtrend, we've had the largest wave up since the downtrend began, right? And so now we're looking for opportunities to buy. This is a change in behavior. It's a key consideration. It makes this trade here, that short trade at that narrow range bar number 7 on this kind of resistance, makes this trade a high odds trade. So now the Wyckoff play, the Wyckoff story is, a strong market turns soft, we get an upthrust, it gets tested, supply comes in on a large wave down. Now we've rallied back weakly to resistance, and we have price action that indicates a short sale trade, and then the market rolls off the rest of the day. You see how we're using the story now? Down volume at 4 is also a hint. That's probably back earlier. Yeah, the downside volume at 4 tells you that there's some supply coming in as well. But I just didn't want to confuse everybody. So those are the waves. Those are really useful, right? Very useful. All right, let's take a look at one more here with the Weiss wave. Kind of a simple one. This happened the other day. So we get some volume coming into the downside, then we get some volume coming into the upside, then we get volume coming into the downside on the Weiss wave. What's going on here? This is like, back and forth, back and forth. Hard to trade this, right? Maybe you could have traded in here, you could have gotten in maybe on this. You might have, but these are not what I would call high odds trades. This isn't bad. However, look at what happens in the middle here. We come down and the Weiss wave volume is down here, right? Then we rally up and come right back down again. And we have high volume coming in, and high volume on bars 2 and 3, right? So is that supply coming in, or is that demand coming in? So one of the things on the Weiss wave to notice is that supply doesn't actually expand to the downside as the market stops here on this spring, right? It also gives us a climactic action type of indication. You can see that on the Weiss wave, the normal Weiss wave bars here, like for example here, it goes up nice and smoothly, right? Every new bar goes up basically the same amount as before. Same thing here, same thing here. Even here, although these are wider apart, they're still smooth, all right? Smooth. Okay, look at what happens on this wave. If it were smooth, it would have stopped here. The fact that the last bar has such a large amount of volume on it suggests climactic action, okay? You got to confirm it. And this gets confirmed on these 2 bars, but you've got to, this is just a minor climax on bar 1 of the heavy volume coming in. And that's what shows up on the Weiss wave. So that's a useful little indication for the Weiss wave as well. So here we have, just using local support on the 5-minute with the Weiss wave, we have a retracement to the halfway mark that sets up a spring where the Weiss wave volume has dried up to the downside and potentially has climactic action at the end, just before the spring. And we see strong volume and strong key reversal bars here at the low. So either of these bars is a fine buy in here, is a buy opportunity. And then on the rally up, look at, this is demand overcoming supply clearly. And so you'd be looking for an opportunity to go long in here as well. Oh, one more on the Weiss wave. Okay, just a quickie here. Do most liquid stocks have this kind of daily volume small? Yeah, I think they do. I think it's more pronounced in the futures markets like the S&Ps or the Dow or the NASDAQ, but they still have it, yeah. So look at this, we're coming down, right? Downside volume is really strong, so supply is overcoming demand, right? Makes it really easy to read compared to all of this, but we still want to read this as well. We rally up, we get a little demand in here, and we kind of go back and forth, and then we have a small upthrust here. Well, look at the wave volume. It's low here too, right? But here it's minuscule. There's no upside volume, so there's no demand. This is no demand in here on the Weiss wave, right? We drop down to 2, not a tremendous amount of volume in here. We get the volume picks up here on a large key reversal. This is another spring. Kind of hard to buy that because we're 10 points away from the low here. So you either wait for a test or you forego or you wait for the trade to wait for another opportunity at some other point. You just forego this entry. Well, we get a nice test here. Not very clear on the standard volume, but look at the Weiss wave volume. We come back down to the support level here and we test it, and we test it nicely. So there's your buy opportunity right there. Didn't produce much. We didn't, and you can see that the Weiss wave volume is starting to fall off up in here, and then it picks up to the downside. So this spring didn't give you a great spring because we're trying to take a spring in a downtrend, which is typical for springs not to work there. But I wanted to point out I mean, you didn't get hurt here. You would have gotten in, you still got 7, 10 points out of this little move. It's not a bad move, but a good spring should take out the last swing high, and the good upthrust should take out the last swing low. So you can see here, we get the upthrust at 1, we don't take out the low. Here we get the spring at 2, tested at 3, and we never take out the high. And that's because we're in a strong down move here. Where would you exit this spring trade? By this point here, somewhere over in here. Why would I say that? Let me make it clear. So we've rallied up, all right? Let's say we entered in here, and we rally up, and now we're going sideways, and we're sitting on top of support. Fine. We push up here on good volume, right? And we see the Weiss wave has got decent, some upside volume. It's starting to get smaller, but the volume still looks okay here. All right, well, we would expect follow through, and we're not getting it. This should just do this, should take right off and go on up. After we've gone sideways for 1, 2, 3, 4, 5, 6. So we're going half an hour, 40 minutes here, and then we fall right, we can't move up above that. So that's my exit in somewhere in here, probably one of these last 2 bars here. As I see, this is not rallying off. And that would be it. A lot of times though, if I get 10 or 12 points in a trade, I got another Weiss wave. We're really doing Weiss wave tonight. If I get 10 or 12 points in a trade, I just exit out anyway. That's typical for the S&Ps to go about 10 points and then peter out. So just some experience talking there, right? All right, so look, again, just looking at the Weiss wave, again on a 5-minute chart, we break support, good flow, ease of movement down, see it clearly on the standard volume, you see it clearly on the Weiss wave. Supply overcoming demand. When we are in this situation, we look for a weak rally. We get that here. The volume dries up nicely. You can short that little narrow range bar. Different ways to enter on the close, right? A tick or 2 below the low of this bar, also good. A tick or 2 below the low of 2 bars back. And if we were in an uptrend, we were looking to go long and we were in a pullback, we'd be buy stopping the highs, right? Buy stopping the highs up here if we were looking to go long. So that's another way to do it. A third way to do it is to, you can't really do it. You could probably do it. Yeah, you can't really do it here. But here you could, it's on the break of the trend line, the demand line. So you would be getting in down in here somewhere. So with each of these, this is the most aggressive buying on the close, right? But if we buy stuff, if we sell, I'm sorry, selling on the close, if we sell stop the low or 2-day low or sell stop the break of the trend line, it's going to be farther away than this point here. So you're paying for insurance, right? If you get pulled into a trade because it goes below the lows, that's insurance. You've paid for the insurance, but you're not getting as good a price. So just keep that in mind. More aggressive players will play here. More conservative will use one of the other two methods, either the buy stopping the lows of the last or second to last bar. Both test out well. Or sell stopping in this case, or sell stopping a break of the trend line, the demand line. Is there a special setting for each time frame on the Weiss wave? Yeah, you can play around with it a little bit. Generally, we use 3/4 of a point on the S&Ps for the 5-minute and the 3-minute and even the 15-minute. You can use that. If you start going up to the hourly and the 4-hour and the daily, I think it comes with instructions on how to do the settings, but I think the daily is 6 points and the 240 might be 4 points. Yeah. So you can adjust those. All right. So again, that same thing, look for this. This is such a useful tool. Look at the good flow starts to get small, right? Same as the up waves getting larger and the down waves, right? It's the same kind of idea here. The upflow is getting small. And you can see on the Weiss wave, it's just given you no demand in here. I know the prices are moving up, but from a broader perspective, there's just no demand coming into this market. And your short is, you have a couple of shorts in here. You can short on this bar here, but the best one is 5 on that no demand after we've seen the thing start to turn. All right. Do I have even more on, one more on the Weiss wave? Just look at this volume, very hard to read, right? If we bring in the Weiss wave though, now here we don't see really strong ease of movement up, but we have good solid upflow on the Weiss wave, demand overcoming supply. We get a pullback here into support, this little shelf of support here and here. It's kind of a minor access line. We get the key reversal. Now you had a key reversal in here too. I would have bought that. In fact, I did buy this and got stopped out and then rebought it again. Not really a big deal, but look at how nicely the Weiss wave shows no supply there. Hard to read that here. Much harder to read that here. We rally up again. I don't see real strength, real strong ease of movement coming up, but what I see on the Weiss wave is that the up waves are bigger than the down waves. So demand is still, it's a simple way to do it, but demand is still prominent. We come down to D, back on top of old resistance, now support. And this is kind of not a great trading day, right? It's kind of choppy in here. Look at how low the downside volume is, no supply. Again, harder to read here. And then we go on up. All right, I think that's it for, yeah. Any questions on the Weiss wave? did I cover simple pullback versus a complex pullback? I don't distinguish between those. That's Elliott wave, and we don't really distinguish between those. We're just looking for simple kinds of reactions here. Do you not use market orders? Occasionally I do, yeah, occasionally. If I want to get in and I want to get in, then I'll use a market order. All right, let's take a look at this chart here, seeing a turn occur in the market. This is also important for folks. Sorry, this got crunched down a little bit. But you can see from the overnight here, from about 5:30 in the morning to right at 9:30. So for 4 hours, right, we've been going down. Just kind of down, down, down. And then the last hour or so before the market opens, look at how we start plummeting down, right? And we get widespread bars. And then especially at the climax, we get huge volume. And you see price action closing off of the highs. We don't get the indication on the Weiss wave because of the, why is that? Oh, because the high volume coming in here, it's kind of skewing this. We're using, we're using pre-market and US session. So it's going to be a little less, I wouldn't say accurate, but a little less revealing, I guess is the way to say it. When we're looking at climactic action, look for this plummeting action. You can usually draw 2 or 3 trend channels on this, meaning that the trend is mature. And we said this has been going on for 4 hours. That's very mature on an intraday time frame. And we get this plummeting action, the high volume, and then the closes in the middle. All right, and the market rallies up. It comes up to this point here. In Wyckoff lexicon, this would be the automatic rally after a selling climax. And then we come back down and we retest the low. We get a secondary test. That's what the ST stands for. Wyckoff called these secondary tests. And then this is also a spring in here, right? So let's talk a little bit about this. So the first thing to notice is that climactic action, right? And the second thing to notice is the large upwave that occurs. So we've been coming down and let me do this way because it usually is helpful. So we've been coming down and making these kinds of moves down, right? Something like that. And then the up waves have been smaller, right? But now look at what happens. A huge up wave comes into play. I understand it gets broken in here, and the Weiss wave will show that it gets broken. But what I'm interested in is the overall move. So Wyckoff used to talk about this. He said that when the down waves get smaller or the up waves start to get larger, then we're looking at a change of behavior. So the up wave we got climactic action, up wave gets larger, right? Now we come back down to revisit the lows and try to push down further, but we spring it. Springs go underneath the last swing low here at the selling climax, as it does here, and then rallies back up it. It can't hold the lows down here, and instead it comes back on up with a strong close, showing buyers are present. Okay, now we get some decent downside volume here, but it's still less than the prior. Whoops, I didn't change that. It's still less than the prior, the swing low down there. And we see also shortening of the thrust in here. That's what this red line is. with, on this second bar, effort to go down, effort to go down, no result. And then we flush underneath with a large key reversal and spring those lows. Now, this does change the trend. It takes a while. This is later on in the day. It takes a while. We get kind of a choppy rally coming up. And now look at what happens. We get a push down into this low. First thing I look at is the Weiss wave. Hardly any supply down there, right? We get a rally back up. I see more demand coming in on the Weiss wave. Hard to read that in here, right? And now we come down. Notice how choppy this is, right? Notice how choppy. We can draw a line through here and hit most of those price bars. Compare it to this, and really compare it to this and this, okay? No comparison, right? This is chopping here. Now, I want to point out one other thing you might not see, but it's really important. So doing this thing again, we have this wave comes down, right? And this wave comes down. Then we have an up wave. And look at this up wave. Much larger, right? It's very subtle, hard to see unless you're looking for it. But this is a larger up wave since the down move began, right? This is a larger up wave. And so we're interested in this, and we get a nice little spring in here. I love this. This, just like we saw the test of the up thrust earlier, this whole thing here is a test of the spring, of this spring down below. And then the market rockets off into the close on high volume and good spread. So that's a good way to see a turn in the market as we start to see the larger waves and the volume coming in. All right, let's see. We've been going on since 7, so we've been going on for an hour and a half. Do you guys want to take a 5-minute break, or shall we keep going? I probably have another 45 minutes worth of material here, give or take. So you want to take a 5-minute bathroom break or keep going? You buy the, somebody asked, do you lease or buy the Weiss wave? You have to purchase the Weiss wave. Doesn't matter. Everybody, most people are saying keep going. Okay, so we're going to keep going. All right, so let's now start talking about multiple time frames. This is where we're going to start looking at, in this instance, the 60-minute chart, which is on the right, and the 5-minute, which is on the left. Let me get a better color here. Okay. Yeah, excuse me. All right. So coming in on the 60-minute up in here, let me get to that. So coming in here, we see a couple of things on the 60. We're coming in, here's the end of yesterday. This is the session break. And so there's been several hours in the overnight trading through the Asian session and the European session. And then where you see the high volume, that's the American session typically, right? So look it up in here. The last few hours, we just have no demand up in there, right? And from yesterday's high, we go a little bit higher and then a little bit higher, but we're getting that shortening of the thrust in there as well. We can see that, right? And by the way, what I'm showing you here, you can do the same thing on the daily and weekly. You just, instead of the 5-minute, you use the daily chart. Instead of the 60, you use the weekly chart, okay? Okay, so we see yesterday's, this is all coming in around yesterday's high. I didn't put that in, but that's yesterday's high right there. Or I'm sorry, actually a little bit lower, but it's right around that area, okay? So 60-minute, on the 60-minute, look at what happens on bar A. The US opens, the US session opens, and we get a large volume down, We get a wider spread down compared to anything in here. We are breaking supports and we're closing in the lower third of the market, right? So market's falling below support on increased volume. That says supply is in the market, right? That's the hourly chart we're seeing. All right, we haven't even looked at the 5-minute yet. Now we'll look at the 5-minute. Kind of hard to see that. The bottom of A is noted on the 5-minute chart right here. So we see high volume coming into the downside on the Weiss wave, and we see the shortening of the thrust on the 5-minute, and yet we see the hourly is telling us this is a weak market, this is weakness, and we get a 5-minute little hidden up thrust or selling bar in here, and we can short that right on the close, and that takes us down. We'd be out of this market somewhere down in here maybe, right? So we short that. Then the market goes sideways for a bit, but it makes a lower 60-minute low on bar B, and that occurs right here on the Weiss wave, right? And I noticed that hourly bar B has a lower high, a lower low, and a lower close than bar A. So weakness in the market, right? So 5-minute finally drops through support over here, and we see all this support level is broken now, right, on the 5-minute. And then it gives on bar 2 a no demand. Look at the nice low volume there and nice low volume here on the Weiss wave. So we've got no demand, right? Oh, and this should be a 2 here, not a 1. Sorry about that. So no demand. There's the short right there, right? And we're at support. Old support turns into resistance. So notice what we're doing here. We've got supply coming in clearly on the hourly chart. We were able to take one trade based on the hourly action when the 5-minute gave us the high sign here, so to speak. It dropped down. I mean, you would have gotten in here at a little, maybe 55 and out here somewhere along this line, just so 5, 6, 7 points maybe. A nice little trade, first trade of the day. This one gives you a nice little trade coming down as well. And then we see volume coming into the downside here. Whoops, downside here, not that one, not this, but the downside. The volume's coming into the downside, right? And then we get a weak rally up to 4. We get another indication to go short. Look at the Weiss wave here. And that brings us down to, oh, I'm sorry, that was on hourly bar C here. So we still have negativity on the hourly. And all we're doing is looking for, I call this the 65-minute combo trade. All we're doing is looking for a weak rally and an indication to short, okay? And we get that on bar 4. Now, note hourly bar, hourly D. We get heavy volume coming in, right? And we don't go anywhere. We don't go down very far. We start to see shortening of the thrust in here on the hourly, right? And on the 5-minute, we start plummeting down. We get the highest volume coming in, and then we revisit this at the completion of bar D, thinking, okay, maybe this is going to go down now lower. But what happens? It rallies back on up again. So we push on up, and this is a bit of a shakeout here because of the depth of the move down and then back up again. And then we get a test here at bar 7. And I didn't put that in, but that's right here on the Weiss wave. Very small little red bar here. There's a buy opportunity there. Better to come back up on top of support. Now we've completed bar E here, right in this area, or we are completing it. So we know there's strength in here. We get the weak pullback, narrow ranges, compare this to this and this, right? We get the narrow ranges coming back and we get back, we're on top of support, we get the key reversal, and there's our long trade, right? We come up a little bit higher. We start to see a little bit of supply coming in, but notice what happens when we come back on top of old resistance, now support down here at F. No supply down here. So the market continues on up and there's a trade in there. So again, you've got 1, 2, 3, 4, 5, 6, 5 or 6 trades for the day. You don't need to make a ton of trades. On that no demand, you commonly pick up volume less than the previous 2 bars only on the standard, not able to pick up volume less than the previous 2 bars on the Weiss wave. Yeah, that's absolutely right. We don't use that rule of thumb that the wave has to be 2 less than the prior. That wouldn't be helpful for us. So you can see how useful the hourly is, giving us direction in most of the trades, even though this looks like a fairly, especially the morning, fairly choppy in here, right? When your trading time frame is choppy, step up a couple of time frames, to the 60-minute. You go from the 5 to the 15 to the 60. You could look at the 30-minute too, but I like the 60. And that will give you, Joe DiNapoli used to call the intraday higher time frame, like the 30-minute or the 60-minute, the key of the day. And this really is the key of the day. It gives you a good indication about what this market is, what the next move of the market's going to be, coordinating the hourly with the 5-minute. Okay. Here we are on the weekly and the daily chart. Now we have the weekly. This is Microsoft on the right and the daily on the left. So, and it's the same thing. We start with a weekly pullback, right, at A. Note how the daily responds with wide price spreads and volume to the downside here on this bar A. That this is A over here, right? Then at bars 1 and 2, look at what happens here. They go down on pretty good volume for bar 1, not so much on bar 2, but we get shortening of the thrust and shortening of the thrust. We're just stopping here. The downflow suddenly gets poor, okay? And so the market attempts a rally, but as we're going up, volume's going down, we get that little small little bar, narrow range bar closing in the middle, light volume. It's a no demand bar up there, and that's fine to short, or you do the things that I talked about earlier. The low of the first low, the low of that bar, the low of 2 bars back, or you can sell stop the break of the trend line there, a small little trend line. Any and all of those work out well. All right, so the market comes down here and finds support. It comes back to weekly support. That's this line here. We're now down at B, right? We're down here, and it comes to weekly support. Not a surprise, okay? And so and now we've got big volume on the daily right here at bar 4, and the next bar is up. So I would call this probably stopping volume in here. Doesn't really matter what you call it, but I notice that there's effort, a lot of effort to go down because we're coming down. But what do? We close back at yesterday's low, and we don't make that much progress to the downside. The next bar is up. We rally up a little bit. If you want to be aggressive, you can buy this test in here at 6. we push on up, nothing really to write home about here. This is the key area in here though. We come back up, we can draw in a trend channel after we break this high in here. We see that we're overbought in the trend channel, right? Bar 8 has very large volume in here, most likely a buying climax in here. Bar 9 tries to go up, closes in the middle, kind of a narrow range bar, volumes dropping off, no demand in here, right? No demand in here. Now, this bar also completes hourly bar C, or actually bar 8 completed hourly C. Yeah, 8 completes C, by hourly C. Notice, oh, I didn't draw it in, sorry, I didn't label it. C is here. Notice we have, let me make sure that's right. 1, 2, 3. Sorry, wrong one. It's still low volume. It's the next one over. Still low volume up here. There's no demand. Notice this is coming into what? A vertical acceleration area, right? On high volume. And now we're starting to get weakness coming in. Market drops back into the trend channel, comes up and gives us a weak little bar here, a little hidden up thrust on a daily basis, but there's a good short opportunity right there. And that's occurring with weekly. After this weekly, what we're doing, we're shorting 10, but we're shorting right there, okay? Right there on the weekly. And our target, we don't quite get to the target. Our target is going to be down here at the low of B. We start to hold in here. We see the heavy volume coming in, potential selling climax to the downside. We see shortening of the thrust. We see good volume on bar 12, holding the market up, trying to hold above this low. And that would be the exit in there, okay? Because we didn't get all the way down. So it's not like you do this mechanically. You still have to be looking at this over and over again. All right, let's continue with daily and weekly and look at how to trade congestion action. And we look at the weekly here. This is, I think it's MasterCard, right? MA is MasterCard. So, oh, wait a minute. Where did my notes go? I had some things to say about this. Yeah, here we go. So the first week, right, on weekly bar number 1, it kind of sets the range, doesn't it? And because we've been going up, we see the shortening of the thrust in here, and now bang, we come down. We also note that there's support over here that got touched a couple of times. And so we would expect that to have some sort of an effect on the market when it comes back down to that level. So now on daily bar 2, so weekly bar 1 ends down in here, right, on the daily. And I think weekly bar 2 was a short week with only 4 days in it and ends in here. Now look at what happens on the daily. At bar B, hang on a second, I lost my, yeah, okay. We actually, bar B here is a minor up thrust, and you can see it here. That's what we're trading right in here. It's a minor up thrust of bar 2. And then that brings us back down to the bottom of the trading range and the lows at bar 1, right? From here, we see shortening of the thrust start to come into play. We see some effort to go down, no real result. And then on bar C, we get light volume to the downside, rejection of prices below, and a spring. So we buy this. This is our buy opportunity here. We look for the trade to go back to the top of the trading range. Doesn't quite do it. We start seeing shortening of the thrust, Bar D has some supply in it, then bar E, no demand. So we exit out of there. The next bar down is negative, and we can short there or coming on the lows of these or as we come down. We come back down to the bottom of the trading range. We get bar F looks to me like a little bit of a minor climax, a little bit of a pop in volume with the close off of the lows coming into support. Bar G had more volume trying to come down, but it stops right here. The flow gets really poor right on bar G. And I know this is hard to buy, but that's the buy spot right there, or better actually is to buy bar H. But you could buy either G, being aggressive, the key reversal on the bar after G or after we rally up and then come back in to test. We get a little test bar, you could buy that on H, okay? So a lot of different ways to trade that. Basically what we're doing is using the weekly support and resistance and the daily price action and volume action, looking for things like up thrusts and no demand and shortening of the thrust and clustering of closes and so on and so forth. Pretty clear, everybody? What's the definition of vertical acceleration areas? It's simply an area where the market really moved fast. There'll be another example. We'll see that again. Okay. So let's look at this now on the intraday time frame. And this really, I like this so much too. This is the 65-minute combo. So the 60-minute now is on the right-hand side, the 5 minutes on the right, I'm sorry, the left-hand side and the 5 minutes on the right-hand side. So we get that, we plummet down to A and then rally back up, right? And we can see on the hourly bars, we have nice ease of movement up, good flow to the upside. And bar B is what we're really interested in, right? But on the way up, we're getting, the Weiss wave is showing us good demand overcoming supply. You can see, you can see all the price bar action is pretty strong up in here. Okay, then we get some weakness come in and we're gonna have a pullback, right? So this is the combo. We get a strong hourly bar closing on the top or the bottom if it's a down bar, but closing in the top third or better. Okay, so we have good ease of movement up or good flow up. Volume is going to increase or at least be sustained. Okay, the volume increases or is at least sustained. So that's what we've got here. Now what we look for, so this is the momentum. This is momentum. And the thing about momentum is that momentum creates momentum. We'll see follow through with that momentum, right? So as we come down, we start looking for an opportunity to trade. We notice that the Weiss wave shows no real supply there, no significant supply. And as we come down on the daily, on the 5-minute chart, we see bar 1 closes in the middle off of its lows on higher volume. That's buying coming in. Bar 2 resumes the downtrend, but has light volume. That's no demand, right? And bar 3 gives us the key reversal and the entry. So this is the 5-minute, this is the 65-minute combo. The 60 gives us the momentum with a strong bar, either up or down on good volume. Then we wait, and it doesn't usually take long. It's either going to happen towards the end of that hourly bar or right after it. We're going to see the market start to pull back. And what we're looking for is exactly what we're getting, is the light volume coming down on the pullback. And that's our entry and that's our trade. So that's the 65 combo trade. Sounds like a marketing ploy. Here's a couple of more examples. On bar A, we get that strong hourly bar. It closes here at X. We're interested in bars A and B, and they're closing at here and here, okay? So bar A closes, we look for the weak rally. First we want to confirm, is this ease of movement and good volume and good Weiss wave volume to the downside on the 5-minute to corroborate what we're seeing on the hourly? Well, yeah, it is, right? Now we look for the weak rally. Compare and contrast. I used to have a professor in psychology school. He was a character. He was one of the more brilliant people I've ever met in my life. He would carry a pencil box full of colored pencils that he would make his own notes with in colored pencils. Oh, he was a character, but he was always saying, compare and contrast this with that, that with this. So look at this. Is there ease of movement here? Is there good flow? No. Flow up is poor. The flow up is poor. The flow down was good. If the flow up is poor, downflow is sure to get better pretty soon. It's a binary kind of way to think about flow, but it's a very useful way. All right, so we're looking for that weak pullback. We get it. And there again is our little, narrow range bar on light volume, light Weiss wave volume. There's our entry to short or the other options that I suggested. We then break support, right? Here's our support. We break it on the 5-minute, and we're kind of going down and down. Bar B shows that we have broken that support. And again, we get good volume, good ease of movement down, pretty good ease of movement down. And now we're looking for the weakness to come in on the rally. And we get that right here on, really it's the last bar here, this up bar on lighter volume would be a good spot to short, as is the first B bar here as well, the first bar showing light volume and no demand. So either of those, actually anywhere in here is fine to short, and then we come on down. So that's another example of this, or two examples of the 65 combo. Let's take a look at it on the weekly daily. So weekly bar A, we're going to start here. Weekly bar A, strong bar down, good volume to the downside. Can we confirm it on the daily? Yes, we can, right? So now we look for what? A weak rally, hopefully into resistance. We have some support here. We can draw it across, see if it becomes resistance. We rally up, and we get supply coming in at A, followed by no demand. There's the short right there. This is picture perfect. I love it when this happens. We rally up, we get supply, then no demand, then we're at resistance and we're short, and we get a nice little trade out of that. So that's using this. How do you draw this resistance line? Well, it's right here. It's a straight line. This is support over here. And we draw it right across. Okay. Do you use the first low? I'm not sure what the first low means. What I'm using is in drawing the line. It's all it is a support line. This is here. In this area, the market comes down here and then holds right in this area. So the market found support, and we can go back and we can say that came on old resistance. We push through, right, on good volume. So this is a sign of strength. And then we come back, right? This is a jump across the creek. And then we come back to the edge of the creek over here, and we cool our feet in the water, and then the market takes off again. So this is a support area in here. It was resistance, turns into support. Now the market has fallen through it, but we would extend this over to this area to see if the market comes back up in here. Why would I say that? Well, there were a lot of people who shorted in here thinking that this market was going to go down, especially on this and this bar, right? Hang on a second. Am I doing this wrong? Yeah, I'm doing this wrong. So there were a lot of, I had it backwards. There were a lot of buyers in here holding this market up, and they bought up in here too. And they held on all through this, and as it broke down through, it's these folks who bought in here and still held on that are creating pressure, the selling pressure. They're trying to get out at break even. That's why support and resistance works. We would draw another line over here, right? But nothing happened in here. We draw another line here. Maybe you could have shorted this. We would draw this line here across, and this is probably a short in here and so on. So that's how we draw the horizontal support and resistance. We use any of the bars, any and all the bars. Look, Peter, resistance and support is an area. It's not a price, okay? So it's not the first bar or the second bar. It's kind of try to hit a bunch of bars in here. Try to hit as many as you can, the highs and the lows in here. That's what it would be. Sometimes, you've got resistance up here, but you also have resistance here. And sometimes it doesn't get all the way up there. So it's this, if we were, say, if we were on the, we didn't see any of this other stuff in here. We were only on the bar before C. We would say then that resistance lives in this area here, between the high here and this area here. Okay, it's an area, it's not a price. I notice a lot of times 2 or 3 price bars will have the same high or low. Yeah, and that's generally probably where you would put the resistance in or the support in. All right, I want to also go back up into this area here. So here, look at this. We get this big bar up on the weekly, right? So, and then we get a pullback. Well, is this a good pullback to buy? Not really. Look, you've got weakness coming in here. There's no real indication to buy here. We might have bought this, but we would have been stopped out right away, and we'd be licking our wounds, right? Then look at what happens here. We rally up to hourly D, which is this bar here. Notice the volume is dropping off as we go try to move up from C to D. We get less and less volume. You see that in here as well on the hourly as well, on the daily volume action as well. So as we go up, we come into this resistance and we get an up thrust in here. We get it twice, and so the second time, you ought to believe it, and we can short on that up thrust. And it's a no demand up in here as well. And we drop down a little bit and come back up one more time, again at E, narrow range bar, light volume, again, no demand. So there's another opportunity to short. But this is using what we first thought might be a good weekly daily combo or 65 combo. And it sort of gave us an indication, but it really didn't. There was weakness in here. And we don't have any other weekly daily combos in here, but we can use the weekly just as we were using the hourly. Here we have no demand and no demand here. Well, if we get 2 weeks of no demand and we're going sideways, wouldn't up thrusts and daily no demands be good places to short? And they would be. So you can use the weekly daily in that way as well. All right, we're coming to the end here. Sorry I'm taking us so long. Let's just talk a little bit about planning the day or the week. And it's basically the same thing. We start for the daily, planning our trading day for day traders. We start with a daily chart. And what we're keenly interested in is the structure, right? But We're also very interested in yesterday's high, yesterday's low, right? And any other key levels we might be interested in. Well, this high here, well, it closed on the high, so we wouldn't really be thinking about this at this point. But we might recognize this 3587 as coming across, right? And actually, we're getting an upthrust, a daily upthrust of this last weekly high over here. We also have a lot of negativity coming in on this bar, right? So we would be interested in yesterday's high, yesterday's low, and probably this 3587. And we would transfer that over to our hourly and daily charts. But just I'll keep the daily over here and then the 5-minute chart. So just notice this, as I said before, daily highs and lows are really critical. And when we come into the trading day, there's going to be trading, especially if you're in the US, there will have been trading in the Asian and European sessions. So we're going to have overnight highs and lows. I put in the overnight low here and also yesterday's low, which is this right here, okay? Notice what happens. We come down strong. Now, this is something that I see maybe 2 or sometimes 3 times a week. This is a really good thing to watch out for. And that is just a sharp move with no relief rally. We're not, notice how we're coming up. We're doing these little relief rallies. We come down, we get a little pullback, right? There's no pullbacks here. This is just straight down, bang. When we see straight down into a daily low or straight up into yesterday's high, or maybe we went up higher and we're coming straight down into yesterday's high. Boy, those are often good trades. Watch for, what do we see here? Some stopping volume coming in, shortening of the thrust, effort versus result on bar 2. Then the market pushes back up, closes above bar 3, then gives us a nice little test. I'm sorry, not bar 3. Closes above yesterday's low, and then gives us a nice little test right here on very light volume. I don't have the Weiss wave on this. And the market pushes up from there, okay? Sorry, what am I looking for here? And this is quite an interesting. This was, what was this today? Yes, the day before yesterday. Yeah, yesterday's trading. This was pretty interesting. So we see hourly. Here's the overnight low, right? The overnight low here is right here, and we see hourly A come in and hold in here. And then we start rallying up. We get up to this point here, we see shortening of the thrust and some negativity coming in. But we're looking for a buy opportunity, right? And we see it, we come down to bar 6, still on fairly high volume, but we're just pulling back into yesterday, pulling back up above yesterday's low. So we get the key reversal and there's an entry opportunity. And another one at bar 8, and then another one here at bars 10 and 11. We get up into here. I would encourage you to go through this and walk your way through it. We get a strong bar on B, right? And that ends right in here. So this is where we'd be looking for that 65 combo. And on bar 10, we get what looks like a minor selling climax to the downside, climactic action or stopping volume, doesn't matter what you call it. And then bar 11, here is no demand, and there's your opportunity to go long in there. And keep in mind, you're coming into, somebody asked about vertical acceleration. It's an up bar on good volume, either increasing or sustained volume, in other words, the same volume as it's been the last couple of bars, right? And then we come back in, so that's vertical acceleration, and we come back in to test that area. And that's what's going on here. And vertical acceleration here, and we're testing. And vertical acceleration here, and we're testing. Okay. Now notice what happens here. We get vertical acceleration, but we come all the way down to here. Remember the waves? Up waves bigger than the down waves. Up waves bigger than the down waves. Uh-oh, down wave bigger than the up wave. Change of behavior. And we see that up wave coming in on volume. So we look for a short here. This is no demand up in here. And that's our opportunity to get short. Okay. And by the way, this is at hourly C here, and we're seeing no less demand on hourly C and a close back underneath the recent highs in here. So a small upthrust on hourly C. So the upthrust would have been here on the 5-minute chart, and then we're taking the test of the upthrust. Okay. So you can see that these so-called patterns reoccur all the time, and in different magnitudes and in different time frames and in different ways and shapes, but they all tend to repeat. And the way to keep yourself straight on this is to continue to tell yourself the Wyckoff story. And there's a nice story here of the waves getting larger to the downside, shortening of the thrust, increased supply coming in on bars 16 and 17 on the way down. So that also is negative. And then a weak rally into here. And it's off to the races to the downside. Why would bar 11 not be a sell? Why would bar 11 not be a sell? Because there's no volume on it. Bar 11 is no supply after a large volume coming down. So here's the way to think about this. We start screaming down or pushing down on bar 10 with a lot of volume. So sellers suddenly are really active. Let's go short on this thing. Well, what happened to them? How come they could? What happened, first of all, to all the selling volume? Where did it go? And why weren't the sellers, if they were so active on bar 10, how come bar 11 they couldn't push it down? This is poor downflow. You got to get used to this. It's not easy. It's not an easy thing to trade because it looks so negative. I'll tell you what. If I had if we were in a live webinar, I would do this with you all because it would be fun to do. I would hand out a chart, and on half of the charts there would be no other bars at this point, right? So half of the charts would be just as it is here on bar 11, the down bar. And the other half of the chart would not be a down bar, but would be an up bar. Okay. And I would ask everybody, and I'd hand these out to folks. I'd give half the room, the bar 11 closing low, half the room closing up. And I would say, okay, raise your hands. Who thinks the market's going to go down? And all the people with the down bar will raise, most of them will raise their hands. And then I'll say, who thinks that this is bullish and it's about to go up? And the people with the up bar will raise their hands, or most of them will. This is why you see one thing, with newer traders, their eyes are riveted to the right edge of the chart. Oh, that's you know, no demand. Let's go in there. That's no supply. That's this, that's that. Let's make a trade. No, you don't do that. That's the same thing as doing candlestick patterns. That's the easiest way to get yourself in trouble. You have got to put yourself, if you're going to discretionary trade, which is what we do, you have got to put yourself into the Wyckoff story. So we can do the same thing on the weekly chart. And here's the current week. How you plan for your week. You put in your support and resistance, note out the key levels, put numbers down on your chart to know where they are. And then, you know, what are we looking for here? Well, with this, it's the same kind of thing. Here's the weekly here, and then here's the daily. So What am I looking for? I know I've got resistance on this blue line. So do we get a hidden upthrust in here? Do we get no demand? Or do we, and so then that would be, I could short that then, right? Because I got supply in the background, I've got an upthrust on the weekly, and now I'm testing that upthrust. So it's a good opportunity to go short here. What happens then if, now this is a couple of days into this, but what happens if the next bar does this? Okay, we look for a test now, right? We've pushed up above resistance, now we're looking for a test. What happens if we come down here and then start to get shortening of the thrust? Well, we're probably about halfway back, right? We're in vertical acceleration area. And also this 3397 is a monthly high back, a fairly important monthly high back in February 2020. So it wouldn't be a surprise to stop here, but it could keep going down through. If it goes down through, we look for it to test if it does, and then our target becomes this. So it's the same principles that we use on the intraday basis. I would say if you're swinging here, and especially if you're trying to position trade, going for more than just a couple of days in a row, then you probably want to look at some of the Wyckoff stuff on point and figure charts and combining point and figure with the daily chart. But this certainly will get you started in that direction. So you probably would do a little bit more. The vertical acceleration is not tradable. That's correct. It's for reference. That's correct, Kevin. That's right. That's right. All right. So any questions on preparation for the day or the week? And then I'm going to go through some questions that people asked and I'll address them. And if you have other questions, I'm happy to go through back up into charts, or if we don't need charts, just address them. So it's a lot of information so far, and I can't learn everything all together. And I want to do it in bite-sized pieces first and wonder, do you have, what do you focus on first? And then move on to the next step. Okay, good question. So first, structure. Right? And I'd use the higher time frame for this. Daily on the intraday, weekly on the swing trading. Oh, I forgot to mention on both the swing trading and the week and the intraday trading, don't forget the 240-minute chart. This is equivalent to 4 hours. So each bar is a 4-hour bar. It's an excellent little chart to go a little more deeper into the details of the supply and the demand on the daily. The 240 breaks that down really nicely. So you would, if you start with the daily chart, then you'd look at the daily, then go to the 240. If you start with the weekly, then you would look at the weekly, daily, and then the 240, like that. Okay, so back to this question. What order, what's the focus? So focus on the structure first. See how structure works. Draw in your trend lines. Then do exactly what we did. Look at how price interacts, how the lower time frame, price and volume interacts with the higher time frame structure at those points. Those are the first things to learn. I also focus in on springs and upthrusts as separate. Those are really good trades. I would look also at combining higher time frame, like the 60-minute and the 5-minute, or the weekly and the daily, along with your structure. Now, looking at it as it's unfolding during the course of your trades. So that's how I would do it. You don't have to, there is a lot of information here. So take your time with it. Don't rush it. You can't rush this stuff anyway. So that's what I would suggest on that. Is there another course you offer that would complement this course? Well, all of them do. Chart reading mastery would go into greater detail than this on a whole lot of other things too, not just price action. price and volume, but would give you other details. You could focus in on springs or up thrust. There's individual courses for that, or trends if you want to focus in on that. But you know what I would suggest is that you join Deep Practice. Every week we meet and we do exactly what I was just describing. We start with a daily chart, we look at the 240, then we trade it off of the hourly and the 5-minute, and you will quickly pick up all of this stuff if you do that. And that meets once a week on Thursdays. Everything's recorded, so if you can't make the time, you can always look at the recording. So I would suggest that before buying other courses. I mean, fine if you want to spend your money and give it to us, but that's what I would do. And there's a great bunch of traders in there, everybody from fund managers to novices. It's a really good group of people. It's a lot of fun. Next question. This is my first time with Wyckoff and wonder if I should read his book to go along with his teaching. Well, yes, of course. All right, let me make a couple of suggestions. The Wyckoff course is really good. It's expensive. There's a K in there someplace, right? Wyckoff course. That I think you should have, and you should read through that. But before you do that, because that's expensive, there's a book called Charting the Market. Charting the Market, and it's by Jack Hudson, H-U-T-S-O-N. He's the editor, and it's a book on Wyckoff, and it's an excellent little book. It's probably less than $10 or so on Amazon. Charting the Market, the Wyckoff Method or something like that. Jack Hudson, editor. And you'll see David Weiss is in there and a couple of other good people are in there. This is an excellent little book, and I would suggest this before getting the course. This will give you an excellent overview and a lot of good details too, and then you could go get the course. I'm confused on this following aspect of support. If you have some bars stopping just above or on support with low volume, we can assume this is a low volume test and it should bounce, right? But if you have the same bar stopping above or on support with high volume, we can assume that this is buying and the instrument will also bounce. Probably. Depends on the background and the structure, right? And what if the instrument stops or has shortening of the thrust just under support? On low volume, we assume it's going to bounce because there's no selling pressure, but high volume, this is buy. Yeah. You know, you're twisting yourself into something that just gets you anxious and confused. First of all, you need charts to look at this stuff. It's hard to do it with words. We really need the visual reference. And I will encourage you to do this. I forget the person's name who wrote this, but if there's a couple of examples that you've got that that is prompting this question, take a screenshot and send them in, and I will be happy to go through them in detail. And I'll send you an email back. But this is just, it's like, you know, this is hypotheticals, and it's hard to address hypotheticals because we're looking at so much more than just the volume and the price action right at that moment. We're looking at, is there supply or demand in the background? How has price been coming down to this? What's the next higher time frame saying, and so on? So, you know, I'm not trying to be negative about the question. It's just it's confusing because it really can't be answered, right? We have to look at everything is context dependent, and you have to look at the context of everything. All right, another question comes in. My trading hours start at 8:30 and go into the lunch hour, and then from 1 to 3:30. I want to know if I should stay in the zone. Well, I think you wouldn't be able to stay in the zone the entire trading hours on the screen. Is it okay in between, knowing that a trade setup won't likely occur in the next 20 minutes or so, I can take a break? Yeah. So let me say a couple of things about this. this is more psychological than anything else, but we have limited capacity to think and make decisions and be on alert and be attentive and all of that. I mean, we eventually wear ourselves down. It's a very good idea to take breaks. And I would encourage you to practice mindfulness as well. But that's a different question, and it's a different topic. But taking breaks, yeah, I mean, my trading day starts at 8 o'clock. I usually get in a little bit before 8, check the overnight action. And I like to trade between 8 and 9:30 if there's something there. That's usually a pretty good counter trend trading time period where the larger players are starting to jockey for position, and you can start to read it. So I like doing that. I don't trade much beyond noontime, unless there's, sometimes I trade in the afternoon, but most of the time I'm just trading the morning session. But if I'm trying to trade the whole day, oh my God, yeah, you'd have to take breaks, quite a few breaks. I would encourage you to get up every hour and take, if, unless there's something really happening in the market, you're in a trade and you can't do that. Obviously, that's not a good thing to do. But if you're not in a trade, just take a break and go take a walk around the neighborhood for 10 minutes. Get a little exercise and come back in. You'll be much better trader throughout the course of the day than trying to, stick it out through the whole 6 or 7 hours. I mean, I couldn't do it. I mean, I think that's just crazy. So take breaks, frequent breaks, at least once an hour if you can. Get up and move around too. Don't just sit there all day. It's not good for you. Use a standing desk if you don't have one. And if you don't want to use that, at least get up every hour and move around for 5 minutes or so. Okay, at some point, could you talk about the way to set up workspaces or scanning on Radar Screen? Yeah, this is not a method for scanning. I'm sure, I know that, the TradeGuider folks have done a lot of extensive work on scanning stuff, so you could talk with them a little bit. But really, this is not a method for scanning. What you want to do, what Wyckoff recommended way back, and what Bob Evans recommended, and Dave Matthews and the other folks at Wyckoff, Craig Schroeder, Gary Schuber, is have between a dozen and maybe 25, 30 stocks if you're doing stocks. So, an easy way to do this is just to do the Dow stocks and use the Dow Jones as your market index, just like Wyckoff used the New York Times index back in the 1930s and 20s. You could use the Dow and you look at their 30 stocks. And every night you'd look at those. You would, every single stock, maybe not every night, but every 2 or 3 nights you would look at them. And certainly every week you would go through all of them. And you would be looking for principles, support and resistance, having the structure laid out on your charts and stuff. And actually, if you're tracking 20, 30 stocks, you're going to learn this stuff really quickly because it's going to be showing up all the time, and you'll start seeing it. So that's the way to do it. Radar screens really are good for indications. If you get a 6 on the RSI or a 30 on the ADX, let it light on, then it flags you on that. You can do that. But this method really is all about focusing on the markets you trade, and keeping those charts up and being very familiar with those. That's why I like day trading, and I only trade 1 or 2 markets. I don't have to do all that work. Oh, okay. So that's it on the questions that came in. If you have other questions, that's great. Oh, what about David's book? Yeah, that's a good point. Where do you get the course, and what about David's book? You get the course at the Wyckoff Stock Market Institute, which used to be in Phoenix. I don't know where it is now. SMI is the, if you Google Wyckoff Stock Market Institute, you'll find it and it'll come up. And David's book called Trades About to Happen is an excellent little book as well. So those would be the two, the charting the market would be the first, and the trades about to happen would be the second. The other thing I would look for, I don't know if it's available anymore, but Tom Williams wrote an excellent little book called Undeclared, yeah, I better write this out for you. Undeclared Secrets of the Stock Market. The Undeclared Secrets of the Stock Market. Excellent, excellent little book. Something I've referred to multiple times and actually rewrote it in my own words. Not that I was trying to write his book over, but just to understand it a little bit better. When you take upthrust trades, you put a stop just above the high of the upthrust bar? Yeah, I saw one today in the afternoon and didn't take it because of too big of a stop. Yeah, so you trade smaller. You go to the micro E-mini, or you go to the SPY and trade 50 shares, right? The SPY is the ETF for the S&Ps, and 500 shares equals one E-mini contract. So you break it down. If you trade 100 shares, it's 1/5 of the E-mini contract. I am dedicating a good amount of time practicing bar by bar replay for a few months, and then simulation trading after. I know it's difficult for everyone, but how long before on average? Oh yeah, do you think it's possible? So yeah, make sure, here's the way to do this. When you go to bar by bar replay or sim trading, track every trade you make and be accurate with the entry and the exit. Don't whim frame it, because you're only doing yourself a disservice. Don't disrespect yourself by being sloppy with it. Be accurate. That's the only way you're going to get good, clear data for your own. When you can when you're making 8-10 points every a week, say 8 or 10 points a week consistently, you should be doing that over, say, 8-10 weeks. If you're making at least 8 or 10 points a week and you're doing it consistently, then you can start trading with actual money. Keep it small. Use the micro E-mini, which is, I think, it's either 1/5 or 1/10, I think it's 1/10. It's very small. So you'll wind up trading probably multiple micro E-minis, or whatever they call them. But start with that, and you can earn your way to adding contracts on. Eventually, you want to get to the point where you're trading 5-10 E-mini contracts or more, right? That's where decent money starts to come in. But you start trading that right off, and it's going to be scary for you. I wouldn't, really take it very slow and do that. How long would it take? I'd give yourself 6 months. You should be able to, if you're serious about it, you focus in on one thing and not screw around looking at this kind of method or that kind of method, or you have to do that to some degree to pick the method that you like. So if you haven't done that yet, go off and go look at different methods, and then figure out what you think would work for you, and then focus in on that. Doesn't really matter what you use to trade. I think Wyckoff has got to be the hands down the best, but people do really well on other methods as well. So focus in, and you should be able to, if you're doing daily bar replays and all of that, 6 months you should be having a good sense of your trading, and that you're doing well with it. When the ES comes into the US open market time, there is a sudden surge in volume, and it's confusing to me to analyze this volume. how do you study this volume? Yeah, it is confusing, and you really got to look at it price-wise and again structure. Sometimes you'll see humongous volume coming in, and the market goes down and then comes right back up on the next bar with strong volume. That usually is meaning it's going to go up. I don't try to trade the initial volume. Sometimes I do. I just happen to make a trade right before the open, or I'm in a trade and I'm going to sit through that volatility as best I can. And sometimes it's sometimes I get stopped out. But the way to use the volume in that morning is to understand that all the orders are coming in, and it is going to be much bigger than the overnight volume. And so you can discount it a little bit, but don't discount it too much. Give it 10 or 15 minutes. By 10 or 15 minutes, you should be able to tell what the direction of the first half an hour, or up until the 10 o'clock time period. You should be able to tell the direction off of the 5-minute or the 15-minute chart after the first 10 or 15 minutes. Hopefully that helps. Restate the title of the last book, Trades About to The Undeclared Secrets of the Stock Market by Tom Williams. Undeclared Secrets of the Stock Market, Tom Williams. How long will we be able to access this court on your site? As long as we've got the site up. Yeah, it's good to watch them over and over again. It's good to study stuff. What's the difference between structure and background? Okay, well, structure gives you support and resistance, right? And trending conditions. We're trending up or down, gives us support or resistance in those trends, right? But if we're at, say, resistance, and a price bar has closed, we want to know what happened on that price bar. So if we're at resistance and a lot of supply has come in on that, then the background is weak. The background has supply. The structure just shows resistance. It doesn't say anything more than that to us. But the background conditions show us the price action and the volume and what's happening around there. So if we have, say we've got supply in here, as we drift back up into resistance, we look for the no demand, and then that becomes the short trade, right? But it's the background condition at resistance that gives us the odds for the trade. Okay, the undeclared secrets that drive the stock market. Okay. And you found a file for it. Yeah, I'll bet it's on the internet somewhere that you could look for it. So I misspoke, and what I will do, let's see if I can do this. Send a chat message. No, of course it won't let you copy and send this off. Paste a recent answer, can I? Yeah. Anyway, the undeclared secrets that drive the stock market. Yeah, good, Odell. I'm glad you found it useful. Let's see, I'm just looking here. Yeah, that's it for questions. Any last questions here or comments? The plugin for the WiseWave, what shape does this come in? I normally build my own charts using Python. I have no idea what Python is. Look, Peter, we're not in the business of selling indicators and stuff. This is something that David created this, right? After years of study of Wyckoff, he created this WiseWave, and it's a damn nice little tool. But it's what we use, and I use it on TradeStation and multi-charts, and I think it works on Metastock, which David and I used to use Metastock. I don't use it anymore, and it might work on one other charting package. I think NinjaTrader or something like that. but it doesn't, I have no idea what Python is, and I have no idea how to code it in that, or whether it would work. I mean, it's fairly limited, right? It's a fairly limited thing, because we're not in the business of creating indicators to sell. We're making available what we use day in and day out, workman's tools, so to speak. So I apologize, I can't tell you about that. Can we download Deep Practice? Well, you can't download it, but you can view it. Yeah, you can view it if you purchase the special. We'll have a session tomorrow night, and we had a session last Thursday, and the recording is already there for you if you want it. Okay, folks, I've taken us for almost 3 hours. I can't talk anymore. I've lost my voice. So I will say thank you all, and really do appreciate you coming in and listening to me babble along here. I hope you got something out of this. And that, it'll help, and I hope to see you in Deep Practice, and I hope that this will help your trading. It did wonders for me when I finally realized this is the way I want to trade. It did wonders for my trading, and it just, after I started to understand it and worked with it, my confidence just soared, and that helped make me a better trader. All right, so I thank you. I appreciate everybody staying up even till 2:45 in the morning. Yeah, we get people from all over the globe. It's pretty amazing. But I thank you all, and I wish you really good trading, and I hope to see you in Deep Practice. And until then, the best of your trading. I wish you the best. All right, everybody, take care. Bye-bye.